Good morning. So hopefully today's the day that something gets moving here. Whatever this market is waiting for, FOMC, impeachment, whatever, or just consolidating up at the highs here. The best looking chart uh, appears to be the Russell. It did not break through major support. And so we've gone over this already. And that was the breakout, and the pullback was deep. So deep pullbacks to major support put the trend in question, but don't violate it. And that's a fact. Where other uh, major markets, broader market indices broke down through it and violated their trends on the daily time frame, but they've recovered substantially, which kind of puts things in a neutral trend on the daily time frame. So this little consolidation here, and if those in the green room, of course, you saw the market start to sell off at the end of the day, which I had mentioned, and I've mentioned this before. Sometimes markets go down because they don't go up, and vice versa. And the meaning behind that is, trend being up, things are flat, going sideways, because of the overall big picture. Traders are taking long positions in anticipation of it going up. And when that doesn't work out, well, they just exit positions, and that kind of feeds on itself, and that, kind of can drive a market lower. And so you can see the consolidation here yesterday, it broke out, and then this downward sloping pattern. You can see the little breakdown failure there, like a shakeout, and that was suggesting it's going to go up, and then it starts ticking down. It's near the end of the day, and the stops get hit. That happens, and it rips right back up again. And we see that it just pulled back down. Hold on a sec, guys. I got to turn something else off here. It pulls back close to the prior low there. So there were bids lurking below, even above this major support point, and it just springs right back up again, which creates this bottoming tail bar. And it was the only one that got back above its opening price, and why I'm saying, this is the best looking one. But so far today, this is just, consolidating inside the little range there. So again, nothing happening here pre-market. So things were down and they're coming back up, which again, look at the wide range bar to the downside, and it retests and comes right back up again. So this communicates that traders are still anticipating that the market's going to break out, continuation of the end of year rally. Paul is enlightening me as to why the buyers 38.2 fib level, crescent moon, stars, sun rising above Mars. All of those things. Probably there are traders in a dark room somewhere with some special lighting that is guiding them to these magic levels. So anyway, so this is looking good. We do have this news coming out with the FOMC, which is anticipated to be nothing. And, the commentary that comes after that is what I guess everyone will be sitting on the edge of their chairs. That may drive the market in one direction or the other. Well, those esoteric things, Alex, are kind of hard to kick. It's like an addiction, whether it's alcohol, drugs, indicators. It's like, okay, I'm clean, but let's not let anybody know that I've got this fib level lurking behind the door there. Anyway, those of you in YouTube, everybody likes to joke with me in the chat room because I so vehemently despise the use of indicators. That's good. Green GR Rehab Center, the green room. I love it. So We got some bullish price action that continues here. You can see prices are consolidating up here on the hourly chart, and how this price action here all communicates that the bias is that this market's going to go up. Now, we all know that it doesn't have to go up, but if it doesn't, there's going to be a pretty negative reaction because overall the action is bullish. So this is what shock patterns are all about. So what would be the heck of a shock here? Well, it springs up, and I'm just making up numbers here, to 1660. And at the end of the day, it closes down below 1620. You could be sure there's going to be some ugliness coming after that. Now, I only say that because we always have two scenarios to keep us open to whatever might happen. And the reason why many get destroyed in this market is because either they don't have a second scenario, or they just won't accept one when their money gets put on, the line. So, you always have to have two. And of course, why we have a trading plan, a stop loss, and money management. Anyway, so far, things are just neutral here this morning. Let's call it just neutral to bullish, and prices are just consolidating, as they have been. Dow still down here a little bit, but, this has been the weaker. We talked about the head and shoulders type of a pattern, the new high, and this one being more of the textbook type of a head and shoulders with the lower right shoulder here. But so far it's consolidating, and we see the candle bodies in the upper half of this wide range bar. So part of our factory work, or, as I call it, or thought process, is that we have guidelines that are consistent, right? That says, if this, then interpret it in that way. And so what we have here is, while this tail went deep into the wide range bar, all the candle bodies, the opens and closes at this moment, are in the upper half. And that is what guides us to, well, whatever this noise is going on here within this range, overall, it's staying in the upper part. This hasn't resolved itself to the upside, so we still don't know. So from this time frame, unless this was to at least take out these highs here, you sit on your hands. You don't do anything. And you see the difference here between the Russell and the Dow, where the Russell went down. Remember the pattern. We just looked at W bottom and sprung back up, whereas this sprung up and got knocked back down again. So we've got this divergence between these markets, and the small caps now are, let's call, in favor versus, the Dow industrial stocks, which are still, okay, they're neutral here, but the small caps are being favored to outperform. And so let's go to the S&Ps, and you see the same neutral sideways stuff that's going on here, down, up, sideways. We've covered the weekly time frame throughout the week, a little extended the bottoming tail bar after multiple bars up. That is more suggestive of some consolidation, or maybe a little bit of a pullback. So far, the market is in a coma. So really not doing too much. We'll see if today, after the news, things can get going. And Qs, same story, and we've also talked about the similarity between patterns. So we see that that's continuing, and just still neutrality. However, look, I'll say it again, the Russell is the best looking chart. Consolidating up near the prior swing high. It tried to dip down, it sprung back up again. It hasn't broken out, but we'll see how it all unfolds. Kind of dead in the water too, coma. I mean, markets between FOMC coming, it's here today, of course. This impeachment circus that's going on, it's like, you got to feel like, am I going to get blindsided here? And just look at how things came down so hard and springing back up again. So the thinking is buy on the dip, right? Versus all out bullish uptrend. you know, buying breakouts, buying continuation patterns, correction bars versus institutions thinking, look, if I buy, I'm still bullish, but if I buy some collapse with a stop that's relatively close, I can't get hurt too bad versus buying a breakout in a questionable trend and getting slammed, you know, like this. So a lot of uncertainty and uneasiness within a big picture bullish market. Tony's asking me, market wide range bar on a 60 now has new support established. Yes. So let's just go and look at one here. So Tony's asking me a wide range bar, and I don't know if this is what you're thinking about there, Tony. So again, back to our thought process, factory work. And I like to use those terms because it forces you to be consistent in your analysis. And that's the whole goal of Master Trader Technical Strategies, to provide a thought process, not indicators and fib lines and all of that hocus pocus, a thought process based on historical patterns. And those historical patterns are things that I've studied over about the last 30 years. So they are consistent, right? There's no guarantee that they work, but there's great consistency in the thought process. So what is the thought process here in a wide range bar? Does it actually establish new support? Well, yes, it does, right? In that it's a big momentum move, but the other, we have this continuing thought process that guides us to be objective. That wide range bar is a whole bunch of smaller bars in a lower time frame, which creates a price void. So while this is a power bar, let's just call it a power bar, that suggests a continuation of that move, the other part of the thought process is it's the weakest link in the structure of the chart. And what does that mean? Well, there's nothing to trade against. Now, if this is true, right? So I say that to kind of lead to something else in that. Yes, it's true. It was created. But if it's true that that demand is going to continue as suggested, it's going to create new support where there is none. And what does that mean? Well, when that bar went up, there's nothing underneath it till down here, right? Because again, it creates a void. It's a power bar, wide range bar, it's ripping back up again. So there's no support. Whereas, okay, if someone bought here, they could say, well, I'll buy on a retest here. And if it fails, I'm out. Well, there's nothing inside of here. So what are you going to trade against? So what we then wait for is it to create support. And how do you create support? You make a pivot. What is a pivot? And this is the whole process of Master Trader Technical Strategies course, is to build a thought process, define a pivot. Once I have a pivot, now it has created new support. If I get a retest of that, it has created stronger support. So now, with that being said, now I really have a true support point that's defined a line in the sand, there that should not be violated. So now we've got this trading range going on, right? What's going on here? So that's why once it pivots, traders will trade against that, believing that it's going to hold. And then we see if it can break out of the range. So now, and that's why, look, it's, you know, what I said before, it should stay in the upper half of the wide range bar. And that's just a guide. And now it formed that new support right there. So now we're all waiting for, can it actually break out? And then when you start bringing in multiple time frames, patterns, what's to the left, so on and so forth, you begin to build this giant thought process that guides us to probabilities. Okay, let's continue because I can talk here for the next hour on this. Anyway, so we covered oil, which is in a coma here, waiting. Well, the market's going to open. Maybe it's not going to do anything. You'll get to SPX level bonds here, kind of flat, doing nothing. Another coma market. Gold in a coma. staying in the bottom part of this wide range bar. So I've got my alert up here because of this W bottom to see if it can get through it. Silver, another coma. The markets are sleepy here, right? And SPX, let's get to that. And Paul's asking about 3110, 15, 3110. Yeah, so here's a support level, 3110. That should not be violated. Here was the pullback yesterday. And again, a bit of a deeper pullback, right? Super bullish situation, whereas this, not really a wide range, it has a gap, but that's a wide range bar, and where it tries to hold, it fails. And again, the dip down, buying on the dips and the retest. And, anyway, we don't get much data on SPX. Do you have balls to do spread ahead of FOMC? Well, I guess you're asking Paul, because that's my, yeah. McGraw is McGraw, Alex. He's quick draw. So whatever happens, it's not, FOMC is not going to gap down, right? So you don't have the gap risk that you do with a spread holding it overnight. So it's okay. Things will move fast. And as long as you have your stops in place, you'll get taken out. And, it's like any other trade. There's going to be some pain involved. What's the money management that protects you from disaster? Anyway, so that's this level, right? That should hold. And I don't know, what was the 3160? Well, sure. I mean, here's your trading range. That's new highs. Now, we'll see how the pattern develops here intraday. But if the Fed chair comes out and says something that the market perceives as bullish and obviously what it wants based on this trading, this could be ripping right back up to 3160. So again, when you put on a spread, ideally you're getting close to where you have some room, or there's been some type of a break in one direction that guides you as to, well, it's not going up there. It's kind of a balancing act, of course, because if you wait too long, there's no premium up there. And so that's just the nature of the beast. Nothing you can do about it. But you know what you're doing better than I. Right. Transports just in a coma here, and doing nothing. Ideally, this starts pushing up. If you see transports breaking down below these lows, they could go down by themselves, but clearly something is wrong if these start to break down and the markets are holding up. So just keep that in mind. And I guess lastly, our internals just continue to be dead neutral. So no help with any guidance there. Markets are in limbo, just waiting for something to ignite them. I think generally the consensus is to the upside, but we just haven't seen that yet. So that being said, it's all yours, Dan.
All right, thanks. Good morning. Yeah, other than the IWM, yeah, everything looks like it's on hold here today. We only have one problem child today, courtesy of a downgrade. We have the 210, 205 put spread on Home Depot for Friday. It's gapping under the stop, so I sent an alert out. Our rules are 30-minute low. But I hate upgrades, downgrades. I mean, so how my Home Depot's down $5. Did anything get revealed in this clown's downgrade that changed from 4 p.m. close yesterday? No, but people just get wigged around. I saw in the news yesterday some big hedge fund, I think it was Agilent, announced that, oh, he took a stake in Agilent, and Buffett does that all the time. Well, did anything change in that company? You're just putting a newscast in front of the sheep. and they hit the buy or sell button based on it. It's just, I don't know, it's frustrating. But that's why we say we trade people, not stocks. Boeing here is the other drag on the down, and they, you know, they're going to be in the news for a long time. You know, the guy was on CNBC saying about when they're going to try to get the MAX recertified. He's like, I don't know. And the Wall Street Journal said, yeah, exactly, David. It's a joke. I mean, Greg and I could see that in the internet days. Merrill Lynch, you know, when they had very liquid market makers, Milco and, you know, Goldman, GSCO, et cetera. And they would give an upgrade, and they're sitting on the offer all day with 100,000 shares. So Greg and I would just look at each other and say, why? How are these crooks allowed to get away with this crap? It was, you know, they still do it. Maybe they've learned to be a little more incognito from it. All right, I don't know what's wrong with my intraday chart there, but on my other computer, it's down to right under 343. So that's a bearish gap under here. So that's actually a call spread candidate now. All right, everything else looks fine. Let's look at some gappers here. All right, I'm having data problems. Wow. GMRE, 13 bucks. Wow, it's a bearish gap. Last 2 weeks of data is now all the longs are holding losers. ZGNX, oh, McGraw sent me this saying unusual call activity. And I said, yeah, it's worth a watch. And then AMD also. Yeah, Lawrence, we have so many stories like that. Absolutely right. And then when they finally come out and give a sell recommendation, get ready for that to be the bottom. AMD, I like this gap reversal. It can chop around sideways. Still looks higher, weekly, monthly. CVX said they're taking a $10 billion charge, but no pattern. UPS, downgrade. It's a sell setup, 30-minute low. That could be a call spread idea. Ollie, big gap, 66.60. Gap into resistance. Home Depot, we talked about. VAR. I can't tell where you're gapping. Plab 1390, bullish gap. But no, whoa, look at the monthly. Monthly has room. So let's watch that on a pullback. You know, we're going to be talking about retracements on MT Live. This is 100% retracement, which we would never buy. But it kind of, you know, the only time we do this is if it jiggles around a little bit here. Similar to IWM. So IWM's at resistance, but it's holding here. It's doing what bullish price action suggests. Diamonds here at the low pre-market. All right, this is a similar one. Some guy emailed me the other day, and I said I didn't like all these tails. And he emailed me today saying, well, hey, Dan, do you like it any better now? And I said, yes. I said, you had 2 bars here. You had a higher high, closed above the open. Yesterday, see the tail retested the low, and now it's closing. Closing breakout, and the weekly has room, bottoming pattern. So yeah, that's a watch now. Put that on the other computer. McGraw mentioned cyber to me. It's a watch. You know, this is the turn. Remember a buy setup, uptrend, pull back to support, and you need a turn, a reversal. Well, this reversal is happening over many, many bars, not just one bar. But over all these highs, whatever the highest of those tails are, it looks fine. The place is getting whacked. 58 and change. Wow. Wow. And there's no setup there, but that's some pain. AEO. 14 bucks. That's some pain. Play. 4107. 30-minute high. The trade's very volatile, but if it can stabilize, 30-minute high looks good. Let me put him here. And GME. Well, I'm gonna have to reboot before MT Live today. I don't know what's going on with the speed here. My other TradeStation computer seems fine. All right, well, when the market opens here in a minute, I'll switch over to TC. Let me email these watch list item. All right, GME 522. It's a nasty gap under, so this is an upside, false breakout. That's damaged. The old tree I was asking about, I mentioned yesterday that once we get a reversal, it would be a put spread candidate, and now it's gapping way down here. Wow. But it was way too spready. Someone asking about Starbucks on YouTube. We're actually in it. We're long Starbucks, but I don't like the topping tail. Let me just switch over now. I don't know what's going on here. Now it's not letting me exit. Beautiful. Beautiful. I'm trying to log out of this junk. All right, Starbucks. Yeah, CTXS, we're short that. Starbucks, yeah, we're long it on the 1, 2, 3. Got long yesterday. Don't like the topping tail. So I actually said, let's try to get out on a bounce. I don't like that. LKQ, we're watching. It's on our breakout list. AXP is on our breakout list over the highs. EMR, we're watching. Hasn't triggered. BBBY, we're in, but you can add over the highs. JWN, we have a put spread, and you can also buy the stock over the highs, breakout daily, weekly. RH, we have a put spread for next week. ILMN, we're long stock. You know what? This would be a good one to leg into a covered call right now, because it's not doing anything. Diamond's new low. Things are selling off here. I don't expect much action from me ahead of FOMC. I think we're set up for garbage trading here. All right, let's look for next week, the 330s. So yeah, let's sell the 330 calls for next week.